Welcome to my weekly market roundup, 24th April 2021. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems in my trading. I'll use the same systems today. They run on underlying TradeStation and Metastock platforms. Other than the systems listed here, I have introduced Q seasonality. Today I released a beta enhanced version of that program. I'll demonstrate how to use that program today. That was the last slide. Let's continue with the live system. As usual, starting with global markets. For that I'm using Q Global running on Metastock. Looking at the standard weekly daily at a glance template, starting with Australian Market Index AXJO. In last Wednesday's webinar, when price was at this point, I mentioned that the candle was bullish in shape. It was too close to the upper boundary for Q traders to take a long trade, but I did mention that the shape was bullish. Since then, price has not pulled back. The weekly closed with bullish shape and bullish color. It seems that price will continue to go up from here. However, it is overbought for a low risk entry point at this time. Let's look at Japanese market Topix index. Earlier, Topix index broke down at this point. Then it gave a breakdown short setup. That trade had covered the risk distance the very next day. And as is usual, Q traders would have booked profit by that time. Now price pulled back up. It is right in the middle of the triangle pattern formed by resistance trend line and support trend line in the middle of a range that is a no trading zone. Q traders may wait for a breakout to the upside or downside for the trend to be confirmed before taking the next swing trade. Another possibility is to see if price is going to the resistance line and reversing from there, or going to the support line, reversing from there. Those may also give low risk reversal entries. Australian market was uptrending, but Japanese market, looking at the daily chart for short-term trading, it is moving inside a range. China market CSI 300 index. Once again, like I mentioned in the previous webinar also, first I mentioned about price stabilizing was at this time when price came to the trend line support in the weekly chart. Either that candle or that candle. Since then, price has not gone down. Every time price came to the trend line support, you could look for buy setups in individual fundamentally strong stocks. As the price went up from the trend line support for the market index, the fundamentally strong stocks would have gone up more, thereby covering the risk distance. weekly is now bullish in color, bullish in shape. This is the first candle that is showing backdrop color bullish after making the top at this point. It looks like the China market index also would go up, will also go up next week. However, it may pull back and then go up. That possibility is also there because it has already recovered somewhat from the trend line support. So we have both the possibilities. One is a small pullback creating higher low and then going up, or another possibility is that it may go up from here also. If it pulls back and then goes up, that will give a very nice swing low entry opportunity. If it goes up from here, you may still look for buy setups in individual stocks. Why? Because the weekly is bullish and this is the first backdrop color that is bullish after 1, 2, 3, 4, 5, 6, 7, 8, 9. So more than 2 months. After more than 2 months, we have the first bullish weekly candle that usually tends to move price higher, especially when that happens at trendline support in both weekly and daily. Let's look at UK's FTSE index. Like the China market, FTSE is also in a sweet spot in the sense that it is right at trendline support, and on Friday it created a bullish shape candle. There is no Q trade setup in FTSE itself. However, this also looks like going to go up next week because of Friday's candle shape and the trend line support. If that happens, you may look for buy setup in individual fundamentally strong stocks. Lastly, Nifty 50 index India market. This was moving sideways for a while, then it broke down below trendline support that was there at that time. Friday's candle shape is mixed to bearish, and there are multiple trendline resistances above the current price. At the same time, there is weekly trendline support in the weekly chart. Therefore, this is probably not a time either to look for short because of the trendline support, not to look for long because of many trendline resistance. That is the information from the market. If you find a sector that is not following the market, then you may drill down into the sector, into strong industries in that sector, and then further drill down to find fundamentally strong stocks to see if they are giving buying opportunity. The market level for India is not allowing us to take either long or short trade right now. The global picture is now mixed. Some of the markets are moving inside a range. Some are likely to go up next week, and some has no trade opportunity like India. This is not as bullish, nowhere as bullish as the USA market. For the USA market, let's look at Q Elite TradeStation. Now, before we look at TradeStation Q Elite at the USA market ETFs, let me switch to seasonality for a while. The earlier version of seasonality also that I shared, there you could analyze one stock at a time. Now, let me put the market ETFs here, and I am on the home page of the enhanced seasonality tool. As you can see, I can copy paste a large list, or I can just type the symbols. I'm typing the 4 market ETFs. It has dynamically retrieved all the data. How much data? Up to 50 years. Standard setting is 20 years. However, you could reduce it to 5 or go up to 50. This was one comment from Dr. Jeffrey also. I have included that. I personally prefer to use 20 years because if we go back too far, like 50 years, then the seasonality may be misleading. For example, think about stocks like IBM or BlackBerry. Those stocks would have been much stronger 50 years ago than today, and the seasonality may not be representative. The way BlackBerry does business today is different from what it used to do 50 years ago. Maybe 50 years ago it was not there, but earlier also the business nature was different. Same is true for IBM, same is true for General Electric. For many of the companies, going too much back may give us a false sense of security. Seasonality may come out to be high, but the business nature would have changed. For that, I prefer to use 20 years look back. Now, of course, these are market ETFs. That is also fine. I'm using 20 years. All status are okay. 4 symbols entered and 4 are retrieved successfully. Now, I'm clicking the seasonality button. That's going to take me to the seasonality page showing the seasonality of the 4 instruments. As usual, you may double click on any column header to sort by that column. Why I came here before looking at the market ETFs? We are nearing the end of April. And remember, even using the earlier version of seasonality, I already shared on Twitter and probably on YouTube video also that April seasonality was very bullish. DIA and SPY was bullish 80% of the time based on 20 years of history, and IWM 70% of the time. QQQ was less bullish. That is seasonality. Based on that, we could be bullish in April, and that indeed came true. This month is so far bullish. Now, if I wanted to look at the breakdown of, for example, DIA, I could click this button, place cursor anywhere on the DIA row, DIA symbol row, and click the seasonality. Instantly, it shows me the same seasonality data. It shows me how many periods are retrieved, and the first number is how many years it was bullish, how many years it was bearish. So for April, out of 20 years, 16 years were bullish, 3 years were bearish. One year it seems was neutral because all the other numbers are coming as 11, 9, 20, 12, 8, 20. So I guess here for April, 1 year happened to be neutral. In any case, we know seasonality was bullish 80% of the time, and if I go down I can see the history. If I want to know which ones are the biggest movers in April, which years, then I can look at the bright green colors and the bold cases to quickly identify them. And by clicking the heart icon, I could highlight the lines to see the years easily. 2020, previous year, 2009, 2003, and 2001. I can see that May is also bullish 60% of the time. Now, interesting analysis you can do from here many ways. One is when April was bullish, what happened in May? It was bullish also for 2020. For 2009 also, after a strong bullish month in April, May was also bullish. 2003, same thing, and 2001, smaller percentage, but it was bullish. Now, what if I wanted to look at 50 years data? I could go back to home, change it to 50 years, type the symbols again. I erase the symbols, otherwise I could use them. SPY QQQ. Every time I update any symbol, it is retrieving the data. Everything is done. I can go back to look at the seasonality table again. Based on 50 years of data, you can see some of the seasonalities have come down. Dia is the strongest. Dia SPY is still the strongest. Let's look at Dia's data again, detailed data based on 50 years history. Okay, it doesn't have 50 years history. We sent the request to system, but it didn't get the 50 years data. What about SPY? Let's see how much more data is there. It has data until 1993 that the request to Refinitiv could retrieve. 20 years still. Okay, let's try another symbol. Let's try a symbol like IBM. Still in beta version. I want to check if I put 50 years, is it retrieving more than 20 years data? It has retrieved very fast. Now I'm looking at the detail. Because I typed only one symbol, you can see it didn't bring me to the seasonality table. It brought me directly to the detail page. Still retrieving 20 years of data. No, here is 21. So it's retrieving whatever data it can retrieve from 1980 to 2021. I will check again, but in any case, even 20 years data is long enough. You may do different kinds of analysis. I will come back to seasonality to later. Let me go through the market analysis. I came to seasonality primarily to show that April seasonality was bullish, and that worked this year as well. Let's look at the market ETFs now. I'm going to use Q Elite Trade Station for that. S&P 500 ETF SPY. Same comment as I made in my Wednesday's roundup. Bullish. Closing on Friday is also bullish. The weekly candle is also bullish. However, it is too overbought. That will be a pattern true for probably most of the ETFs. Dia, the backdrop color is not bullish, little bit weaker than SPY. SPY, the backdrop color was also cyan. Candle shape is similar, bullish. Friday's candle shape is bullish, so it is also bullish. You can see from relative performance that Dia is underperforming SPY. It is bullish though and overbought near the upper boundary. Both SPY and Dia are making new all-time highs. And QQQ, that was little bit late to make a new all-time high, pulled back little bit. However, still it is at a very high price point, too close to upper boundary level. Weekly is bullish but overbought. And lastly, Russell 2000 ETF IWM. The weekly shape has turned bullish. The color is still bearish, but the shape has turned bullish. And in daily, it broke above the trendline resistance. It broke out of the triangle pattern. Looking at the breakout in daily and the bullish shape in weekly, it seems that price will go up from here. I'll not be surprised if after Dia SPY followed by QQQ, now IWM makes a new all-time high. When the weekly candles of the market ETFs close bullishly like this in terms of shape, and when there is no major news in the first few days of the week. And I use, icon or zenith for that. This is the economic events calendar for the week. Am I selecting the correct week? Let me check. No. Let me change to next week. Okay, there are some events from Tuesday, Wednesday, Thursday on Tuesday. So all the 4 days of the week except Monday. So the Friday's closing was bullish, and Monday there is no major event. So it is likely under such circumstances that the market will continue to go up. And of course the closing had to be bullish for the market ETFs. That happened. Now in the last webinar I mentioned I did take a short position in IWM when right on this day. That time the daily candle and the weekly of course was also magenta, bearish in color. I took it using put vertical. By the close of this candle I could book profit, but I didn't. It was a vertical trade. I was not in a hurry. However, when I saw Friday it broke above the trendline resistance and all the market ETFs closed bullishly, and there is no major event on Monday, I decided to close my IWM put vertical with a loss. That is fine. The long positions that I were holding, they are continuing to do well. IWM put vertical was kind of a hedge, and you may say I took out the hedge with a small loss. I didn't want to hold on to the vertical even if it had a large number of days left, looking at the bullish closure of the ETFs and the fact there is no major news on Monday. Next time I may look for a shorting opportunity if price goes to the watermark and reverses from there, preferably creating a false upside breakout. If that happens, I may look for shorting IWM again, and I will consider that only if IWM remains the weakest of the market ETFs at that time. Is there a possibility that may change? Yes, that may change. And I look at some market insights to see why it is possible. One reason is, of course, market works in that way, in a round and round fashion. First, SPY dia made all-time high, then they stopped moving up, held to their gains, then QQQ made all-time high, and now IWM is going to go up. It's normal for market to move like that. It's not normal that mega caps and small caps move together with equal force. It's not normal. So it is possible from that angle that IWM will make a new all-time high, but there are some other signs also that may happen. One sign, let's look at it. Let's look at the intraday market breadth. Of course, that is too short term to make any conclusion like that. Still, let's look at Friday's market closing. Throughout the day, the market ETFs went up. IWM, DIA, QQQ, SPY. For all of them, if you took a long trade, intraday long trade using early range breakout technique, you would have made a significant profit because the risk was much smaller than the reward for all the market ETFs. Now you can see that in the last 30 minutes, these are 10-minute bars, last 20 to 30 minutes depending on which ETF you are looking at, there was significant price drops. Considering the fact that it was straight going up, pausing, and then slowly it was going up again, there was significant drop near the close of the day across the board. Interestingly now, if you look at the up-down volume, that went up and closed bullishly as well. This is for Nasdaq as a whole, this is NYSE as a whole, and also for Russell, Dow Jones Industrials, NDX, Nasdaq 100 and S&P 500. For all the four major indices and the two composite indices, there was heavy buying in terms of volume at the close, very heavy volume. In fact, buying volume accelerated into the close, whereas price dropped. What can be the reason? The possible explanation is that the higher price stocks dropped near the close. Mega caps dropped near the close. Is it true? I looked up the FANG stocks, Facebook, Apple, Amazon, Netflix, Google, Tesla. And you can see several of them dropped sharply in last 10, 20, 30 minutes, depending on which one you are looking at. These moves, this heavy selling, you may see that from the last 1, 2, 3 volume bars also. These heavy sellings most likely caused the market ETF to drop, whereas there was in fact heavy buying volume in the other stocks. That tends to show that at the close of Friday, a day when the entire week closed with bullish shape candles in weekly and daily, there was increased buying of stocks overall except the mega caps. That is why I said, though it is, you may say it is 10-minute chart, it may not have that much relevance to studying what will happen over a number of days, but still even that piece of insight, you may say, is saying that the small caps will go up now. Mega caps may or may not, but small caps are more likely. I will not say will go up, but it is more likely small cap or IWM will go up than mega caps. And that is the reason I didn't wait. I didn't hold on to my put vertical on IWM. I exited with a small loss. And there are few other insights also. I'll come back to that when I study the Q market breadth, powerful Q market breadth studies from Q Global. But before that, let's look at the market from sector and also from technical breadth angle, following the usual sequence that I follow every YouTube session. Friday closed very bullishly. Now during the day, I think last couple of days and maybe on Friday also, I shared on my YouTube channel and several other forums also that market is overbought, but still it is looking very bullish. The breadth is also bullish. There is no sign of reversal. That I mentioned in my previous webinar also. See this Friday's close. 91% of sectors, 89% of industries, 83% of stocks went up. That is a very bullish closing of the week. All the sectors except one went up. The one that went down, that is utilities, by a small percentage. Utilities is a defensive sector. All the other sectors went up. Financials were the strongest on Friday. As a sector, it went up by a massive 2.74%. Materials also went up, same is infotech, industrials, consumer discretionary, energy, healthcare. These are all non-defensive areas. They went up strongly on Friday. Is it getting overheated? Yes. In the last session also I mentioned it is probably getting overbought, and now we can see one more sign. This sign was not present in my last webinar. The jump in percentage of stocks in the extreme bucket did not go up. That jump was not more than 10-15%. However, on Friday, there is a jump in the most extreme bucket by more than 10%. That is moving too high too fast. It may lose steam. It may not drop immediately, but it may lose steam. It's spending too much fuel to go up. In one day, 10 to 15% jump in the most extreme bucket, that tends to stabilize or tends to lead to a pullback. We may watch for that. However, if we don't consider the jump, then the pullback usually happens after the extreme percentage goes to 30% or so. So there is still a long way to go for the percentage in extreme bucket to reach that 30% level. Now it is only 12.2. In terms of how much did move in one day, it is a bit too much, but in terms of reaching the extreme that leads to a pullback, we have distance to go. Also, the percentage of stocks above midline, it went up, but it is still at 72%, not extreme like 80-90%. So bucket analysis, other than the fact that Friday's jump was sudden and sharp, bucket analysis says price can go up, but we do have to keep in mind the sudden and sharp jump on Friday. Now let's look at the very useful 1 month to 1 day sector industry stock advance decline. Very useful picture, and now you can see everything is bullish. In the last webinar, I mentioned several of the pie charts were bearish, and I did mention we'll see how the week ends. The monthly period was bullish for it seems like forever, and now because of the bullish move on Friday, that nullified the bearish move on Thursday and then some more. Therefore, the sector industry stock advance decline is also bullish. There is no sign of weakness in this at the close of the week. If we look at Finder, the weekly picture is now not so bullish. All signals, in fact 58% bearish. Strength signals 84% bearish. Trend continuation 69% bearish. Reversal is very bullish because many stocks recovered during the week or on Friday. So reversals are very bullish. However, the others are bearish because strength is bearish because of large number of gap downs, gap down and then reversal. That in fact tends to be bullish. Therefore, even though the overall picture is slightly more bearish than bullish, about 60% you may say bearish, still this pattern, gap down followed by bullish reversal, that may tend to be, that usually tends to be bullish. And if we see the daily picture, sorry, by looking at the charts, I had a feeling I'm looking at the wrong Finder. Sorry about that. Something was amiss. Friday was supposed to be much more bullish than this. So let me close the Finder. That was for a different market. This should be the USA market. Sorry about that. Come back again. Something was amiss. Yes. Starting again, the technical breadth balance between bullish and bearish signals. The week actually closed bullishly. Not very much, not 80-90%, but still all signals bullish. All categories are bullish except trend continuation, but reversals are bullish. One concern is that there is still a relatively large number of bearish headwinds in the weekly chart. That is something to keep in mind, just like the point to keep in mind is that Friday, the extreme bucket percentage jumped up by more than 10%. These two things we may keep at the back of our mind. Other than that, the market is bullish, closed with reversals in the weekly interval, and see Friday's picture. This is what at the moment I saw the other finder, I knew something was wrong. Sorry about that. I am doing all these sessions live as I like to do. Friday was very bullish closing, very bullish. Every category, no other comment is required for that. And I am now able to see the number of signals also, not only the percentages as in these four categories, some numbers, relative numbers, bearish versus bullish signals for strength, trend continuation, reversal, and total. Hardly any bearish signal is there, hardly any. Friday was extremely bullish. And you saw the mega caps sold off, some of them in the close, but see how strong Friday's technical breadth is. That is also leading me to think that if mega caps may pull back after earnings, like Netflix did, overall market is very bullish and it will continue to go up. Technical breadth is bullish. And now let's look at the market breadth using Q market breadth. Let's first look at mega cap top 20. Indecision in the weekly chart in terms of shape, and it also displayed the indecision at the top indicator. Daily already displayed series of indecision at the top. Little bit pullback but holding on to the price level. Last couple of days the relative performance shows mega cap as a whole, top 20 mega caps in the USA market, they are underperforming. However, it is not certainly bearish, holding on to the price gain. As I mentioned in the last webinar also, price is too close to the upper boundary for me to consider buying it if I could buy this mega cap top 20. Now let's look at some other useful insight. Let's look at the major indices. To save time, I'm just looking at the weekly interval. What are the major indices? Dow Jones, Nasdaq 100, S&P 1500, S&P 500. I'm looking at the percentage of stocks, how the stocks are moving relative to major moving averages and new high low, advanced decline, up down volume. See advanced decline, up down volume. This is advanced decline, this is up down volume for Dow Jones, for Nasdaq 100, for S&P 1500, the broadest of the four major indices, and S&P 500. All of them are bullish. There is no sign of weakness. And new high low had been bullish forever. So that I am not even checking. But advanced decline, up down volume is continuing to go up. Where is any weakness? None. And if you see the movement of stocks around the major moving averages, related to the major moving averages, let's look at them. For Dow Jones, percentage of stocks were 50 MA above 200 MA. See the percentage. These green lines I drew, they are indicating the 80% level. So for Dow Jones, percentage of stocks with 50 MA above 200 MA is above 80%. Same is true for Nasdaq 100. Even more, see, even more true for S&P 1500, the broadest one. And the same is true for S&P 500. If you see the percentage of stocks above 50 MA, the yellow line, above 50 MA, it's also hovering around 80% for Dow Jones, 80% for for Nasdaq, 80% for S&P 1500, 500. And percentage of stocks where price is above 200 MA. For Dow Jones, well above 80%. Same is true for Nasdaq 100, S&P 1500, S&P 500. So the stocks are showing strength in all possible ways. Now let's look at Nasdaq as a whole. Here I looked at the 4 major indices. To save time, I'll not look at NYSE, but I wanted to point out one thing on the Nasdaq as a whole. Let's look at the weekly interval. Advanced decline is going up, similar to major indices, up down volume going up. New high low was bullish forever. One difference you may notice immediately is the percentage of stocks relative to 50 MA. That is well below 80% level, this green line. In fact, it is also below the 50% level. That is showing some insight that I was talking about. Why is the percentage of stocks above 50 MA down? This is broad. It is not because of mega cap. That means stocks that were higher, they are starting to drop in Nasdaq. This is happening only in Nasdaq. Stocks that were higher, stocks that were lower, they are not dropping so much. If you see the percentage of stocks above 200 MA is not dropping so much, but percentage of stocks above 50 MA is dropping faster. And that is also showing little bit. You can see that percentage of stocks where 50 MA above 200 MA crossed below the average line, the thin white line. But primarily you may read from the slope of the yellow and the white lines that the stocks that were higher, they are starting to come down in Nasdaq only, not in the major indices. Well, why not? I complete the study looking at NYSE. See, NYSE as a whole, the yellow line is not dropping, and of course the orange and white lines are also hovering near 80% level. Yellow line also not dropping. So technology stocks as a whole not so strong. And in fact, if you see this arrow, NYSE had an accumulation day, not day, this is weekly period for the week. Let's look at the very useful total view. We had an accumulation count of 1 for the week, that is for NYSE. NYSE is quite broad. Nasdaq is also broad. So the technology stocks as a whole are not as strong as the broad NYSE. That is something we may use in our trading. First, we saw the mega caps, most of which are tech stocks, sold off near the end of the week. We saw mega cap top 20 stabilizing but not going up as sharply as the broad market. Now we see NYSE has an accumulation count. Nasdaq doesn't have. Not that Nasdaq dropped, it didn't have any distribution count, but still relatively NYSE is stronger. We may use that in our trading. Now that is for the weekly period. For the daily period, we can see on Wednesday there was accumulation in Nasdaq and NYSE both, and on Friday again an accumulation in NYSE. And if you look at total view, that is considering the 2 composites and 4 majors, then you can see whether it is percentage of stocks 50 MA above 200 MA, percentage of stocks above 50 MA or above 200 MA, all are near or at or above the 80% level. That is a very high percentage level. It's not coming down. If at all there was any weakness, that was in Nasdaq as a whole and mega caps. Other than that, there is no weakness. That weakness is also relative, not that there are distribution counts anywhere. So you may use that insight to decide whether to go for buying tech stocks or non-tech stocks. The conclusion will be to go for non-tech stocks at a broader level. Now, what does it show us? The global market not so strong as it used to be a couple of months ago. USA market is very strong across the board, whether we look at market ETFs or sectors, industries, stock breadth, advanced decline, up down volume, how the stocks are moving relative to moving averages, everything is bullish. Any concern? Two things to keep in the back of mind. One is the percentage of stocks in the extreme bucket jumped too much on Friday in one day by more than 10%. Another thing to keep in mind is that there are non-negligible number of bearish headwinds in the weekly interval in the finder chart. Other than that, everything is bullish. Overall, we have to say the market is bullish, and of course that is why I exited my put vertical in IW. Everything is bullish. Everything is bullish. Did I say bullish or bearish? Everything is bullish overall. Now how much time do I have? I have some time, so let me show different ways of using seasonality. Now I released the beta version through Twitter. This is the Dropbox link. If you are already using Age Vital Index, you may simply download it, extract the seasonality program, put it in your working folder. Then you may start using it. And let's play around with the seasonality tool. It is going to be integrated with Q, Vital, Edge, Index, Finder, everything. Those integrations I will release after it goes through quality assurance and release management. I may be using a development version now, but the integration points need even more testing. Even before I release it, beta version, it will take some effort also. I'll release it, but let me play around and you will see how the different integrations will make life easier. This is Q Vital. Q Vital has a way to list your symbol universe in different ways. I tend to use broad universe and then use the Q tools to dissect them. I don't like to maintain too many different universes like high growth stock, dividend stocks, etc. because just using a few clicks of mouse, I can find those insights in real time. I don't have to maintain different lists. So I have a liquid stocks list. And when you are interested in trading options, you may create a liquid options list. Now, from this list of stocks that have liquid options, let me see which ones have bullish seasonality. Now April is ending, so we may look for May. So I may put cursor anywhere. These integration points are not released yet, but I am demonstrating what is going to be released. You may put cursor anywhere on the column. Now click on the new seasonality button. That will bring the stocks into the seasonality tool and instantly it is at work. Nothing is stored on the computer, everything is retrieved in real time. It says one stock it didn't find. Maybe this stock merged with something or is not there. The ticker symbol is not valid. Out of 212 symbols that I retrieved from my symbol universe, 210 were successfully retrieved, 2 were in error. One error was here, BFT, and if I scroll down, I may find another error. SBE. No problem. That happens because stocks may merge or they may be taken private and other reasons. So anyway, I have 210 records. Let's check their seasonality. This is the seasonality. It lists all those 210 stocks. Now April is ending. Let me sort by May. Now you notice the number of years retrieved for these different stocks are different. Well, I wanted to check out if I put 50 as retrieval period, does it retrieve old enough data? It actually does, because it is retrieving 41 years of data for BMY, 41 for BP. So that data retrieval criteria is working. That's good. I see AIG, it retrieved 48 years of data. However, some of the stocks does not have enough history, and those are colored by yellow or orange. Yellow means less than 10 years, orange means less than 5 years. Those may be too short periods to rely on seasonality. So what you could do, you could restrict. You may say use at least 5 years. I mean, show in the seasonality table only stocks that has at least 5 periods of data to calculate seasonality, or at least 10, or you could set it to 0. Currently it is 0, or you could set it to any number you want from this drop down, 5, 10, 20, 30, 40. If you choose a specific number, you may click the refresh button. So if I choose 30-year history, click the refresh button, you will see only the stocks having at least 30 years of data retrieved are shown. But I think we may leave with number 10. So I click the 10 button and retrieved all the stocks that have at least 10 years of history. And now let me sort by May. I see two stocks have stronger, relatively stronger bullish seasonality. Not more than 80%, but those two are having the best seasonality. Which are they? They are Coca-Cola and ON. Now let's look at how would you like to proceed. We can do it in many different ways. We could check their fundamentals using QVital. We could look up their technical setup from Finder, fundamentals from Vital, technical setup from Finder. We could look up the symbols in TradeStation Radar, or we could open the charts. Why don't we do some of those? Let's say we open both of them using charts. I like to use Metastock Q Global because everything is in the same platform. I use TradeStation Q Elite also, very powerful. But let me open this time with Q Global. This is ON, ticker symbol ON on semiconductor. This has very bullish seasonality in May. One of the only two having more than 70% bullish seasonality in May. And incidentally, I see it broke out right on Friday. Broke above the trend line resistance. It was in a channel, broke out with a bullish flow. So this is a possible breakout candidate. And the other stock is Coca-Cola, KO. It is already going up for a while. I wouldn't like to buy now, but it has number of trend line support. It may go up further. Using Q technique, I would have bought at the swing low. Now out of them, ON looks more interesting because it has a breakout point just on Friday. Let's look at it using weekly daily chart. Very nice, isn't it? Because now I see that weekly has a very nice trend line support and a bullish shape candle. Color is not bullish, but that is fine. It is giving a possible breakout setup in daily, and the weekly supported by trend line support. Daily breakout, weekly trend line support, those tend to be pretty powerful. Now we check the chart. there may be a possible trade here. Technically, we saw seasonality. Now from seasonality, let's now go to fundamental analysis. So I am placing my cursor anywhere on the stock, clicking on fundamental analysis button. It is going to take the stock to Q Vital and everything is automatic. It's going to first it retrieved some basic data about the stock here. Now it is retrieving the peers. It has got 62 peer stocks. Now it is retrieving data about the 62 stocks and calculating scorecard. It has medium valuation. Not very high earnings growth, but if you consider the previous 3 quarters, it is accelerating and positive also earnings growth. Acceleration in earnings growth is also useful in making trading decisions, in buying decisions. Has a short squeeze potential, and see the strength in the industry in itself. 95% of the 62 peer stocks of on semiconductor went up on Friday. That is very bullish in itself. But the market was also bullish. Was it relatively stronger? We may check that out using the Q edge. Let's look at the overall graphs first. I click the single gear icon. Beautiful systems, aren't they? The graphs first. The industry relative score is steadily going up, whether you consider the primary industry semiconductors, alternate industry also happens to be semiconductors. The relative score is steadily going up, and you can see the percentage also 5-day, 2-day and 1-day period. Over 5-day it was down, over 2-day up, over 1-day up very much, almost 3%. Now if I want to look at the industry rotation over longer period with a single click, I can see that. Very beautiful, isn't it? Those who are like me, like turnaround candidates in every way, this is a turnaround at the industry level. It was relatively weaker and now it is one of the strongest, showing some acceleration shown by the base column. That is at the industry level, and at the stock level we already saw in itself the industry is very strong. Now let's go back to seasonality. Let's do some more things. We have the ability to read the chart, we did that, or we could look up the signals using Q Finder, another extremely powerful tool, I may say. Some people use it, some people don't use it because they may not have metastock, but those who use it keep on using it because we don't miss anything. If I put my cursor anywhere on the symbol ON, click on the lookup from Finder, it's going to show me the technical signals of the stock, not only today, that is the orange color, today meaning Friday's close, it has a breakout, it has a bullish flow, but also blue color means sometime this week it had a pullback at a reversal. See, these are the two things I missed to articulate when I read the chart myself. It did have a pullback this week, blue color is this week, green color would have been on Thursday, 1 day earlier, but blue is this week. So it did have a pullback, it did have a reversal also. Those are powerful bullish signals, but I missed to read them when I looked at the chart myself. The power of Finder is it looks at not only signals of today, it also looks at signals of this week, or it would have found signals of yesterday or even earlier than that. I tend to look only at signals today, yesterday and this week. All are bullish signals, and I also see it is at price extreme high, went up by 3.6% on Friday. 3.96, almost 4%. Now let's come back to seasonality. Everything we are doing around seasonality now. We saw 71% bullish seasonality in May, the coming month. And this month it is up by 2.3%. Let's look at the detail of the seasonality. We have not done that yet. So I'm going to click the show me detail of the seasonality button. May, we are looking at this column. 71% bullish seasonality out of 17 years of data. Maybe there is some rounding. No, not rounding. 17 years of data, 12 years up, 5 years down. Average gain 5.6%, but we are more interested probably on average when up, that is 14%. Average when down is also 14%, more than that. And which months are most bullish? You can see immediately from the green colors. Let me highlight them using the icon. This. 2018, 15, 2009, 2008, 2005, 2004. Those were the strongest years. Went up by 19%, 30%, 32, 25, 15, 13. Large percentages. Looking at that, you may consider taking a breakout trade in this stock ON. Let's review again. What are the things we saw so far? Has a breakout in daily, bullish flow in daily. Now we can see a pullback this week. Pullback meaning came to the yellow direction line, stayed there. White direction line is below price. So it was a pullback setup this week, and that same candle had a reversal. Same candle had a bull release also. Now it is giving a breakout. Weekly is bullish. That is technical insight. What did we see from industry rotation? Very strong. Relatively one of the strongest turnaround candidate in terms of industry. What did we see from industry graphs? Steadily going up in relative score. Percentage performance for the industry very high, almost 3% up this Friday in one day. What did we see from fundamentals? Medium valued earnings growth is accelerating rapidly. Short squeeze potential in itself, very strong industry. And seasonality, the coming month seasonality is strongly bullish. One of the only two stocks from this list of stocks that has liquid options, only one of two. Strong bullish seasonality, and when up for last 17 years it was up by average of 14%, but some of the years had 30, 25, 30, 20, about those large percentages. Those are different ways you may use the tools together. Now let me I am at 1 hour point. Let me show you one more thing. See, we looked at ON and we looked at its fundamental scorecard, but it has 62 stocks. I just looked, my starting point was stocks with liquid options. Then I found ON with great seasonality in May. I did a peer analysis. I saw the industry semiconductors is very strong on Friday. Now I have the peer stocks. So why don't I take all the peer stocks? Okay, for ON I already know, but no problem. I highlighted all of them. Why don't I check if seasonality is strong for any of these peer stocks in the month of May? So I highlighted all the stocks, and at the top now there is going to be a seasonality button. I click that and it got all the stocks in seasonality, retrieving again 62 stocks, 62 success. I expected that because these are symbols retrieved by Q systems. Now let's check the seasonality again. Now it is not of liquid stocks, it is the PR stocks of ON. Extremely powerful using single clicks. Now here I already have 10-year minimum history requirement set, so I just sort by May seasonality, reverse the sort order again. Now I see there are few other stocks than ON. ON is here 71%, but I have 3 other stocks with even better bullish seasonality, and AVGO is the best. So I could look, let me close Q. Okay, why don't I highlighted these 3. I could highlight in any way. I click the grid or trace station radar icon. That would take the not Reuters symbol but ticker symbols that I can then paste in Q sonar or trace station radar. So let's see if there is any technical signal. 2 of them also have breakout PWI AMBA, and 2 of them have pullback. One has go with flow. So let's look at them. For looking at them, why don't I just open them using Q Global? Easier to do that. AMBA also has a breakout, but not as clean breakout as ON. It has an upper tail. Let me close that. This is looking better. POWI, the immediate breakout is significant, very bullish closing on Friday. However, there is another trend line resistance. Let's keep this for now. This one has a pullback setup, AVGO. It is moving sideways inside a range at the lower end of the range. Not that. At the lower end of the range, it displayed the indecision at the bottom. On Thursday, on Friday, it displayed bull release signal, bullish color candle, and a pullback setup. There is a trend line resistance nearby. However, it has strong bullish seasonality. If you consider strong bullish seasonality, you may buy it now and put stop just below the trend line support. Now, if we are using seasonality, we saw the percentage of seasonality is very high, 80% plus, but we need to see now the detail of the seasonality. Let's check that out. 82% of the time it is up in May, but is it up by significant percentages? It is showing 82% of the time it is up. Average up is 5.8%, but we are more interested in average when up, that is 9.9%. That is average, and you can see sometimes it is up by 26%, 11, 18%, 9, 8%, 5%. The stop loss is narrow, so this is also a stock that you may consider. Now let's check its fundamentals. Now I'm checking the seasonality of this stock, but there is a fundamental analysis button here. So I could just click that FEGO. Let's do its fundamental analysis using Q Vital. And once you start using it, you will start loving seasonality and the way it is integrated with the rest of the systems. Q Edge, Vital, even Index, Finder. Well, this is great fundamental. And why the 360 degrees analysis is important? See, I did the analysis starting with liquid stocks, liquid option stocks, then found only 2 stocks with great seasonality in May. Only one of them had a possible trade setup, ON, that had reasonable fundamentals. Then I carried out a peer analysis. Some of the peers had even better seasonality, and they had technical setup also, AVGO, and see its fundamentals now. Undervalued with earnings growth. All the 3 quarters, 3 years positive. Revenue also all the 3 quarters, 3 years positive. Industry we already know strong. So once you carry out this analysis, you may decide not for ON, which can also be a buying candidate, but probably AVGO. Let's now summarize again what we saw so far for AVGO. Star candidate in terms of fundamentals. In itself, strong industry. Age already showed us the semiconductor strong in terms of graph and industry rotation very strong. Chart showed us that it is inside a range and at the lower end of the range. The correct point to buy because stop loss is very narrow. And we could look at it using weekly, daily, using a single click. Great. Weekly also has a trend line support similar to ON. That is a good point. Weekly, daily, both are going up from trend line support. And then we looked at seasonality. Great seasonality in May, the best among the peer stocks of ON. And if I wanted to look up the signals for the current week using the lookup finder, let me just do that and maybe we'll close the session. Broadcom, it has a pullback setup. So the same signal that we saw from Q Elite Sonar, we can see that from Q Finder. So there are buying opportunities that are not high risk. The market is at very high level. We saw that. Let's look at SPY again. Yes, very high level. I said I'm not going to buy SPY, but there are buying opportunities which are very strong fundamentally. AVGO is extremely strong, star candidate, great industry strength. Even seasonality in May is great, has a technical low risk buy point. Like this, whatever be the market condition, as you can see from this live use of the systems, that you are always able to find very high probability. Now, even including seasonality, everything in real time, high probability and low risk trades. And if you follow discipline, as I say, there is no reason not to make some profit from the market. Again, the beta version of the enhanced seasonality tool is already available. Those who are using QH Vital Index, they may download and start using it. The integration points, I'll have to pass through quality assurance and release it. It will take some more time. I'm sure you will love the seasonality program. I'm sure about it and the way it is integrated. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session. Probably that will be on Wednesday, 8 a.m. Eastern Standard Time. I'll notify on Twitter, and if you are subscribing to my YouTube channel Trading Profitably, you will come to know from there as well. Thanks a lot once again. Keep safe and trade profitably.